Alright guys, I'm just gonna do a quick review of my analysis from the previous video. So previously I was looking at this 15 minutes balance price range and this fair value gap right here. Today on Friday we hit it and then traded all the way up into this level right here. This level we do have a strong area of price sensitivity on the daily chart, right? On the daily chart we do have this daily volume imbalance here, right? This area here, see this small little gap, right? This is where this is Friday's high. If you drop down to 15 minutes, this is the highs of the Fridays, right? So I'll show you the execution, right, just so that you can see that the trade was taken. So over here, right at the bottom, I bought 3 contracts of the micro futures, okay, for ES, and I sold it right here because the thing is that this happened at 9:45 and price traded up unwilling to take out the highs created in the morning 8:30 and sort of consolidated around here, right? Try to push up several times but doesn't really go past it, especially after the noon session, okay, the lunch hour. So this signals low probability, so I closed my positions in this area here with confluence of the daily volume imbalance. Okay, so to those that says that the market is free and random, I mean, I would invite them to explain why the price action is so precise, right? Even though I was looking for this relative equal highs, doesn't mean that I have to hold a trade to this level to see profits, right? You just have to have a sense of where the price is going, like the direction of the price, and then you trade accordingly and then you manage your trade. I mean, that's how I choose to do it, right? I think eventually we still come back here to take out these highs maybe next week, since the Friday session is closing and we're heading into holidays, right? Consolidating sideways movements are expected due to low volume. Okay, so I think this is gonna be the objective for next week, right? Once you've decided that the price has a certain direction, then you can formulate your trades around that direction with the bias. All right. Yep. So just to update for my paper trading, right? For the account history, as you can see, there are numerous. I'll just pull it up, extend it. There are numerous trades that I took throughout the period from the 7th of December. That was where I started this paper trading account, right? I started off with 10k, right? Traded through the month of December. As you can see, low probabilities, right? And you just have to wait for the right price action, like or the right A plus setup that gives you this type of move, and you just have to choose the trades wisely. Okay, so within one trade I managed to break even back to 10k even though I was down 600 prior to this trade. Okay, this shows how that if you manage your trades, manage your risk, you can never blow out your account. That is impossible to blow out your account, right? So just some trade management journaling right here. This is just for my own journal's sake. So I mean, different people have different ways that they do manage their portfolio. I mean, not portfolio, but trading account. So this is how I do it, right? And yeah, there you have it, right to the pip. Okay, it went past like about 1 point beyond my entry, and that was like I experienced no drawdown at all in this trade, which is what I wanted, because at the same time it's Friday. Usually price, if in a high probability condition, it would set to run up to the level that it wants to take out without any sort of pullbacks, right? That is what I expect for Fridays, and for Fridays trades should be fast, right? You really want to get out by the PM session. That's what I think for Fridays. Okay, so there you have it. Just a small update here. And yeah, I mean, like, just think about it. How am I able to call it before it happens, right? It doesn't make sense if you think that you can't time the markets, right? It just doesn't make sense. This is the proof right here. So just consider changing your perspectives on the markets. It's going to help you a lot if you're a retail investor, right? Dollar cost averaging. I mean, just question that strategy. Moving into 2023, if you continue to dollar cost average, it's going to be a very painful year. Okay, it's not a warning or whatever, or a bias. Maybe I'm biased, but then the thing is that I'm just trying to help you minimize your losses in the year of 2023, right? Just take note of that. And yeah, nothing else for now. Just wanted to review this trade idea and see how it pan out. Alright, yeah, that's all.